Welcome everyone to the New Orleans Investment Conference, October 2020. My name is David Wolfen. I'll be Avino silver and gold mines. We've got three interesting stories here that I think you're going to like, and I encourage you to listen carefully because they're very, very intriguing. So presenters today, I'll be presenting Avino silver and gold mines. Mr. Peter Latta will be presenting Silver Wolf exploration. I'll be making a brief comment on Coral Gold and introducing Nomad. It's a new royalty company and an up-and-comer, and we really like it a lot. There'll be other team members available at our virtual booth: Jennifer North, Manager of Investor Relations; Andrew Kaplan, Capital Market Strategist; and Joanna Goundry, Investor Relations Assistant. Resilience, initiative, and enterprise. Resilience in good and bad times, now in our 52nd year of business. Initiative, focused on empowerment, education, and trust, encouraging fresh ideas and solution solving as a team. Enterprise, we seek quality, growth, business strategy through teamwork. This disclaimer is to let you know I'll be making forward-looking statements. This photo shows you that, we're a primary silver producer and explorer in Mexico in the state of Durango. You see a picture of the mill building and the offices on the front there. There's a picture of a drill. We own several drills. And the lower picture is the school in the local community in which we've helped fund. Rich in history, Avino is in its 52nd year. We have 35 years of production, so 27 years from 1974 to 2001. And then we reopened the mine in 2011 and declared commercial production in 2012. So we've got 8 years of production under our belt since reopening the mine, and we've gone through 3 expansions. The history of Avino, the property, goes back over 500 years. The Spanish conquistadors claimed to have found a mountain of silver, and they formed the city of Durango to mine it. Interesting enough, you see the picture of the Avino coin in there. That was made in the 1800s. There was a smelter on site. It was owned by the British. It was listed on the London Stock Exchange and had a reported market cap of £1 million. This was all destroyed in the revolution in the early 1900s, and there was no production after that until we got involved in the late 60s, early 70s, and put it back into production. Why Mexico? Well, Mexico is one of the biggest producing regions or countries in the world of silver. And because it goes back hundreds of years, they've got mining in their DNA. So we are fortunate that we have 100% Mexican labor skill force on site. Next slide. So this is the location. So Avino is located in the state of Durango in the heart of Mexico. It's on the Sierra Madre Silver Belt. As you can see, it's surrounded by mines throughout Durango, so there's plenty of skilled labor in the area. There's 650,000 people that live in the city of Durango, which is about an hour drive away from the mine site, which is accessible by paved road. It's in the heart of rolling farmland, so it's a low security risk and great location with access to local communities to draw our labor from. Next slide. Recent news. So I'm thrilled to report we had a positive outcome to a strike that was on the property. This ended in mid-October, and we're now doing an evaluation of all the equipment, surface equipment, underground equipment, milling equipment, to make sure it's in excellent working condition. We are also moving forward with a proposed dry stack tailing storage facility. This is what we call TSF number 2. And so we're just working with the local communities to get the social blessing from the nearby community to proceed with the construction and the civil works of TSF number 2. We expect TSF number 2 will be completed in 2021. And the positives of restarting the mine will directly benefit the local communities. So we're thrilled about that. Other news, we've optioned 2 properties in the state of Durango to the company called Silver Wolf Exploration, which I mentioned at the beginning. Silver Wolf has an option to acquire these properties by making cash payments and spending money on the projects. This limits Avino's expense of maintaining these properties, and we keep our upside potential by owning shares in that company. So here you can see the location of the Avino mine, El Labyrinto, and Ana Maria. So they're within trucking distance of Avino mine. So this is why we're excited about Silver Wolf exploring these properties, because if they're successful in finding ore, then we have a mill that we can monetize quickly. Next slide. Here you can see our silver equivalent production profile. So this year was impacted by COVID and the strike. But next year, we're expecting between 2.5 and 2.7 million ounces of silver equivalent. And this is a full year of production based on our current mining grade and throughput. Next slide. So this is our financial and operating information. So revenues were impacted in Q2 by COVID and the strike. We had a negative 800,000 EBITDA. Adjusted EBITDA was positive 2 million. Net loss of 1.1 million in the quarter. But you can see here our cash cost per silver equivalent ounce is $10.92. All in sustaining is $16.37. So with silver around $25 an ounce, we're expecting to generate free cash flow when we reopen the mine. And our current cash position has grown. We're at 12.6 million, and our working capital has been pretty steady at 14 million. Next slide. So here, so about Avino, so it's located on a volcanic caldera. This is an important geological setting, and there's significant underexplored areas that remain on the property even after 500 years. They didn't have drill rigs back then, so there's a lot of potential, which I'll talk about coming up in the next slides. The Avino mine remains open at depth and unexplored at depth. And so it's a robust mineralized stockwork system with breccia vein textures, which is very unique. It's a porphyry style mine, which means these things can stack upon each other. So there's tremendous potential below the operating mine where it is now. La Preciosa is owned by Coeur. It's directly beside us. They have between 150 and 200 million ounces of silver equivalent. So it just shows you the scale of the area and what the potential is on our property. We have 350 employees when we get back up to 100% operation. 80% are locals. 20% come from different areas throughout Durango or throughout Mexico if we can't find the particular skill set nearby. But we're making a conscious effort to try to train up more people that are locally, so we'll have less travel and less chance of COVID getting into the area. There's been no reported cases at Avino or in the local villages, so we're thrilled to be able to restart soon once the evaluation is done. Next slide. So, so last year we sold our non-core mine in British Columbia called the Braylorn mine, and so that allowed us to reposition our focus on Avino, Mexico, and we're building a senior geological team. We've brought in a senior geologist with 3.5 decades of experience. We're bringing in new consultants with new modern thinking. So we've got structural geologists looking at the structures, because it's important to understand how these deposits were formed and where the best targets could be, because there's plenty of targets on the property. And so we have a team of consultants working on that right now. Next slide. And here you can see the unique aspect of the property. In the circle on the left, you see the arrows pointing up and down. Those are faults, so they're moving in opposite directions, so they open up the ground in between and create conduits for mineral deposition. And so we have dozens of veins. We have 20 named veins and 50 unnamed veins on the property. So trying to prioritize that is our number one job right now as to where the high grade is. Next slide. So here you can see an overhead shot on the left side. Shows you where the Avino mine is on our property, and then to the right is a long section, basically slicing the ground in half, so you can see how the minerals were, where they're located, and where the mined out area is. So we're currently operating in the yellow area in the middle, and so you can see it's open along strike and at depth below the mine. The strike length is 1.6 kilometers in length, so it's a big target area. Next slide. Here we can see the reason why I show you this is it's about 1.7 kilometers away from the mill. The Santiago vein is a high priority target. It's perpendicular to the San Gonzalo mine. And why is that unique? Because these things tend to splay off from each other. So now we have access through the mine workings at San Gonzalo. So if we're able to find the Santiago becomes our next mine, it'll be easy to monetize it because all the infrastructure is in place. And you can see some of the high grade hits that came in San Gonzalo running in the kilograms of silver. We've got some indications that Santiago could be very similar. Moving on to the next slide. And so this is the area where we're going to build TSF number 2, which I mentioned earlier. It's fully permitted on private land, but we're just working on getting the social blessing from the town next door. And so we're working on that. We hope to get them all signed up here soon, and we'll be able to finish or start working on the civil works of the dry stack filter building. Next slide. Here, so we have a National Instrument 43101 resource estimate. So we have 10,666,000 tons of measured and indicated, or 47.5 million ounces of silver equivalent. In the inferred category, there's 6 million tons, or another 23.2 million ounces of silver equivalent. This came out in February 2018, so we're working on a new one. So we expect a new resource estimate in 2021. And with the successful exploration that went on in the past, we expect these numbers to remain very similar. Next slide. So analysts and newsletter coverage. So you got H.C. Wainwright, Alliance Global, Roth Capital Partners, and Cantor Fitzgerald. They've all had to revise their targets because they were all achieved, and so I believe that the average target price is $1.50 US from these various analysts. Next slide is the trading and capitalization summary. So we have a 95 million market cap. The 52-week range is from 26 cents to $1.49. So this is thanks to the higher metal prices that really brought people back into our sector. We're currently trading around $1 US. We have a liquid market. We trade on the New York American Exchange. We trade on average 2 million shares a day. And in Canada, 200,000 shares a day on the Toronto Stock Exchange. Major shareholders are Avino Management, Bard Associates, Sprott. So I'm probably the second largest shareholder of the company. Issued and outstanding, there's 89.2 million shares out, 9.8 million with options, warrants, and RSUs, and fully diluted 99 million shares. Next slide. Plans for 2021, a minimum 11,500 meters. This was a minimum just because we weren't sure if the strike was going to go on or not. We're looking at increasing this meters with the new geological team. Also, what we're working on is linking up the underground from level 9 to level 6 in the west, and this will allow for more trucks and one-way traffic in the underground mine, and for us to feed 2,500 ton per day mill. We want to construct and finish building the dry stack tailings for TSF number 2 next year, and decommission TSF number 1, because there's a large endowment of silver in the old tailings dump, and we have plans for that. But I recommend that you come by the virtual booth and we can tell you more about that. Plus, we've done various upgrades in mill circuit number 4, which is a brand new state-of-the-art circuit, 1,000 ton per day. So we're improving our recovery rates. Next slide. Investment case. So it's a primary silver producer, good leverage to silver. You can see our share price went up even when the mine was down, and that was because of the silver market. We're one of the few pure silver plays out there. We've got dozens of exploration targets at the mine. We're undervalued relative to our silver peer group on a PNAV basis, price to net asset value. At current market prices, we're profitable, and we want to maintain that and generate free cash flow. CSR or ESG, we're very conscious of looking after the community in which we operate in, and so we provide a lot of resources to the local communities, and we get low labor turnover there, so we have a very loyal labor force. Our balance sheet is strengthened. As I mentioned, our cash position has grown up. Our working capital has grown, and so it's growing now with higher metal prices. We've got strong liquidity in our stock and longevity, a proven track record with 52 years in the business. That concludes the first part of the presentation. So now I'm going to introduce Silver Wolf Exploration. It's an early stage exploration company operated out of our office. So there's synergies there. As mentioned in Avino's presentation, we have optioned the property to two properties to Silver Wolf, and I would like to introduce the newly appointed president of Silver Wolf, Mr. Peter Latta. He's a metallurgical engineer and VP of Technical Services for Avino. So without further ado, please welcome Mr. Peter Latta.
Thank you very much, David. Of course, the standard cautionary language here that I will be making some forward-looking statements. First and foremost, as Dave mentioned, we did just recently do a rebrand, and we changed our name from Grey Rock Resources to Silver Wolf Exploration to really reflect the target metal for the two properties that we optioned in Mexico, while also paying homage to our original founder and David's father, the late Lou Wolfen. So the focus on Mexico, and as David mentioned, it's the largest silver producer in the world. Where the Ana Maria property is located is in a prolific CRD that stands for Carbonate Replacement Deposit District. As David also touched on, there's significant synergies with Avino, and that results in some low overhead, which makes it more efficient from a dollars into the ground perspective. Also, those synergies allow for us to leverage some of our understanding in the area. It's a well-known jurisdiction for us there, and we're very experienced, both from a workforce standpoint and how to navigate the regulatory requirements. There's excellent access to infrastructure. The international airport in Torreon is only a half an hour away from the site itself on paved roads. There are a bit of historical workings. Previous to 1943, actually, there was some iron manganese reserves. But there's not been any modern exploration done on this, so it's ripe for using modern techniques. And when we're putting this company together and really thinking about the target of what we're after, silver plays, we believe silver, and I personally believe silver is going to play a more important role in really creating a greener future as we transition away from carbon-intensive sources. We recognize that silver is needed in all sorts of electronics and energy and alternative energy devices. And that's really something that we can take a lot of pride in finding the resources to help our society transition to a greener future. With regards to the board of directors, you met David there earlier on the presentation. He's our chairman. He has over 30 years of experience in mining and finance, and he will be the chairman of this company. Peter Schreiber, once again, a very experienced gentleman in investment banking, both in Switzerland and here locally in Canada. Stephen Williams, professional engineer, currently working for Bluestone Resources, also with some investment banking experience locally. And myself, once again, a professional engineer on the metallurgical side, as well as an MBA from Simon Fraser University. And I've been in the business for my whole career, just over 15 years now. Although I've always felt like the youngest person in the room for the last 15 years, interestingly enough. With regards to management, David will stay on as CEO. I've already introduced him. Myself as well, I'll be president. Nathan Hart is the CFO. He's got a wealth of experience from a Deloitte background. Carlos Rodriguez is an absolute legend in the exploration business. Very senior gentleman, experienced in Mexico as a Mexican national, and is also our chief operating officer for Avino, and is credited with a discovery with one of the previous companies, actually. So just to go over the option agreement, I know David touched on it a bit. Just to lay it out for you, there's a total of 600,000 Canadian dollars to exercise the option for 100% ownership of the property. However, only 50,000 of that is up front. So it's kind of back-ended to focus on reducing the amount of capital up front. Also, we've granted 300,000 warrants at 20 cents to Avino. There is a requirement for field work, and that totals 750,000. That's over 4 years. And once again, upfront, only 50,000 a year is required to once again reduce the amount of expenditure upfront to reduce the capital intensity. Again, as David touched on, the ROFR, the right of first refusal, that any ore that we do find, Avino has the first right to toll treat that, and it's only 200 kilometers away, so that is actually a reasonable trucking distance if that's required. And that's why we've spun them out of Avino's non-core assets. They have enough to focus on. However, that mill does allow us to toll treat in the future if we do find a resource that is worth doing that for. The upside is there is no royalty currently on the property, which is fantastic, which is could be a source of financing in the future. Now, some of you or many of you, I imagine, are very familiar with this curve. This is called the Lassonde curve, which kind of accurately predicts the mining cycle. We are pre-discovery here, which represents that the biggest value creation is ahead of us here as we move towards a potential discovery. Our share structure is quite tight at the moment. Our current market cap is just about 5 million Canadian, with 23 or about 24 million shares outstanding, 26.5 fully diluted, and with most of those shares being held by insiders, keeping the float relatively low. So why silver? I don't want to go on too much about this, as I'm sure many of you are familiar with the reasons to be bullish on precious metals. Once again, I mentioned the alternative energy and electric vehicles are something I'm very passionate about, and I think will increase in demand. But also, as we know, the unprecedented money printing has devalued fiat currency. So we believe that will certainly help precious metals, and silver having that duality of both being an industrial metal and a financial instrument, I think gives it an extra boost. So the property location here, once again, both properties are located in Durango, Mexico. As I mentioned, the closest city to Ana Maria is Torreon, which happens to be home of the second largest mining company, Peñoles. And like I said, it's about half an hour away to the international airport on paved roads. So access to infrastructure, both electricity and power, is quite simple. Now, where these properties are located in the greater context of mineral deposits, as I mentioned, those carbonate replacement deposits, is along this carbonate replacement belt, which the Mexican one is the most famous in the world. And the CRD deposits are epigenetic, intrusion-related, high-temperature, sulfide-dominant, lead, zinc, silver, copper, and gold-rich deposits. And I know that's a mouthful, but what that means is this style of deposit is very prevalent in this area, and we happen to be located in a right beside them. If you look just north of that Anna Maria Triangle, you look at La Platosa, that's 9 million silver equivalent ounces. You look to the left of that, Mampini, I believe it's something about 157 million silver equivalent ounces. And of course, Penasquito, who you may know, with over 1 billion ounces. But it talks about the address and the location that we're in. We're in the right geological setting there. To talk more about the geological theory there and why we think this is a pretty good property to look into, we have to go into the CRD and the Skarn geological model. And this model was put together here by this cartoon was put together by Dr. Peter McGaw, who's very familiar with these types of deposits in this specific area. So the two things that I want to take away from this point is you need that pink intrusive stock penetrating the greenstone or limestone carbonate deposits. And that's kind of the key two factors you need for these high temperature fluids to deposit precious metals. That intrusive stock in those carbonate rocks. And that will be important for 2 slides from now as I highlight how our current geological setting matches the model. So here, before we get into that, I just want to show the claim boundaries and ownership. We have 2,500 hectares, so a reasonably sized land package that's split over 3 claims. And the surrounding claims are actually owned by the second largest mining company in Mexico, Peñoles. So you can see those claims outlined in blue. And as I mentioned, 2,500 hectares. So as I mentioned in 2 slides ago, talking about that intrusive, this slide showcases the lithology. Now that's the different types of rocks, essentially, with the big pink rock in the middle being that intrusive we talked about, and those green outer rocks being those carbonate rocks. So we are right on the boundary where that intrusive penetrates into those carbonate rocks, which matches exactly the geological theory as far as where these high temperature fluids should be deposited, potentially depositing precious metals. So what's our exploration methodology? What's our plan of attack? We are going to first use some remote sensing to identify any alterations. We're going to use some drone surveys and some LiDAR locally to identify any sort of geological structures and stratigraphic contacts, which is going to drive the field mapping, the boots on the ground, the structural analysis, the walking of the property. We're then going to layer on top of that some geochemical sampling, where we'll try and find the pathfinder elements or any sort of indicator elements. And also, we're examining a technique actually pioneered by Peter McGaw regarding a stable isotope study. Very interesting work. And then finally, on top of that, we'll layer on some geophysics to identify any favorable host rocks. So as far as timelines and milestones, I talked about the rebrand and management changes, and that has been completed. Our next big milestone is getting approval from the exchange, and we expect that any day now for the transaction to complete. After that, we'll look at starting the geological field work, in Q4 2020, and we'll commence with a systematic approach there, with the goal of that really being targeting, with drilling to come the following quarters or the following year. And we've currently projected about a 10,000 meter program. Of course, that could change depending on the results of the initial field work, but that currently has a $4 million US projected budget as we work towards a potential discovery. So just to highlight the investment case and round it out, 1, we have a focused, experienced team with an asset in a familiar jurisdiction. We have blue sky CRD potential in a prolific CRD belt. We have easy access to infrastructure and skilled labor. And we have the optionality for exit with other regional operators or with our option partner, Avino. And with that, thank you very much. I'll pass it back over to David to introduce the next company.
Thank you, Peter. So now we're going to talk about Coral Gold. And so hang on 1 second here. Okay, Coral Gold, success in one of the richest gold districts in Nevada. There's a 2.7 million ounce deposit, and the recent news that I want to get to is on the next slide right here. So October 24th, we announced that Coral is going to be acquired by Nomad. This is a brand new royalty company made up of ex-Osisko royalty executives. And the transaction calls for the acquisition of $45.8 million US value. Each Coral shareholder will get 0.8 of a unit in Nomad, consisting of one common share and a half warrant, purchase warrant, good for 24 months at a conversion price of $1.71 Canadian. Plus, each Coral shareholder will get 5 cents a share in cash. On the date of announcement, this represented a 45% premium. But if you looked at the and that was based on the previous closing price. But if you took the 20-day volume weighted average, it was a 72% premium. So very attractive to our shareholders. Next slide. So the benefits. So it's a nice premium to our shareholders. And also, I'd like to just point out that Coral's shares have risen over 2,000% in the last 5 years. So if you've been a shareholder since 2016, be very happy today receiving this package. And so the beauty of merging with Nomad is you have access to growth through their package of producing mines that they have royalties on. They announced positive earnings and a dividend policy in their very first quarter of operation. So I'm very thrilled about this transaction. Going on to the next slide. So I'd like to introduce Nomad. They're listed on the Toronto Stock Exchange, and I'm going to introduce Joseph De La Plante. He's the Chief Investment Officer. He's one of the founders of the company with Vincent, and their CFO are all ex-Osisko royalty executives. So they've got a great track record. So without further ado, I'd like to introduce Mr. Joseph De La Plante, CIO of Nomad.
Ladies and gentlemen, hi, my name is Joseph De La Plante. I'm Chief Investment Officer and founder of Nomad Royalty Company. I'm very pleased today to be presenting as part of the 2020 New Orleans Investment Conference. As some of you may know, this presentation slot was originally meant for Coral Gold. However, on August 24th, Nomad announced the acquisition of all the outstanding shares of Coral. And so if you're a shareholder of Coral today, please take this opportunity to learn more about our company, our vision, and what it will mean to become a shareholder of Nomad. Nomad is the newest entrant into the precious metal royalty space. We are a company that was put together earlier this year by myself and my two partners, Vincent Metcalf and Elif Levesque. We're very excited about our plans for the near, medium, and long term, and we truly believe that our company is differentiated and deserves your attention. So on that note, I will move into the presentation and tell you more about what we're doing. As I mentioned, Nomad is a new company that was put together early this year by myself and my two partners, Elif Levesque and Vincent Metcalf. What's important to know about our team is that we have been working together directly in another royalty company over the past 7 years, building it up into an intermediate royalty company. And so what that means is, as a team, we have the experience in the royalty space of being transactional, acquiring new royalties, structuring new streams, and even many M&A transactions. What that means is that there's no learning curve for us. We know what we're doing and we're hitting the ground running in this business. And so what that means for us is that the strategy of Nomad is one that we devised based on our experience in the sector. We are a young team and we have a somewhat different vision for our company within the royalty space. And what that means is that we truly believe that our role in the royalty space is to deliver a very diversified portfolio of royalties and streams. Diversification is key for us. We are not looking for huge cornerstone assets. We want to have measured exposure to many different jurisdictions, operators, and assets in our portfolio, and we strongly believe that that's the best way that we will deliver strong growth and a company that has a very good risk profile and very good exposure to the precious metal space. We are focused on free cash flow. That is one of the key elements that we look for when we make investments. Again, building on our experience here, we've had many opportunities to invest at different times in the mine development cycle. And we believe the role of a royalty company is to deliver that cash flow, and that's what drives the premium multiples. And so cash flow is very important for us. Similarly, what that means is that we're also focused on having very low G&A costs. It's important to know that the three founders in this company have committed to taking our salary in shares for the first year of operations to demonstrate to investors that we think like owners and that we are aligned with you as shareholders and focused on keeping the costs low. Similarly, the dividend is really important for us. A few months after beginning trading, we already have announced our dividend policy. The first dividend will be paid on October 15th to shareholders on record as of September 30th. The dividend is something that we strongly believe is a differentiating point in our business. Again, going back to how we think royalty companies should compensate their shareholders and should continue to return capital, we will be disciplined with this dividend and grow it over time as the cash flow base in our business increases. So why Nomad? So we're a team that's done it before and we're going to do it again. It's a ground floor opportunity in a new royalty company. It's not an opportunity that comes across every day. And if you look at the last 10 royalty companies that were created, for the most part, buying shares in the first year has been a great investment. We think this is no different. We are 100% gold and silver business with no exposure to other commodities. Very strong cash flow within the portfolio with 6 cash flowing assets currently and 1 under construction and 1 on care and maintenance, which we believe will be in production by next year. The royalty business is very powerful because it delivers significant amount of free cash flow that the management team can then use to deploy into new opportunities to continue to grow the business. It's a great model. It has a very low risk profile and has demonstrated time and time again that it works. I think it's important to note from a valuation point of view what that means for shareholders of Nomad today and for shareholders of Coral that will become shareholders of Nomad upon closing of our transaction. Nomad is currently trading at the lower end of the valuation for the smaller royalty companies. This is the case because we're new. We are working on market awareness and making sure that our company is well known by all the investors and analysts within the mining space. But it's important to note also that our objective as a company is to grow significantly in scale over the next 5 years to reach that higher tier of royalty companies that trade at the really high multiples. I've highlighted a few multiples on this page, but we clearly see an opportunity with the strategy that we have to significantly grow our business and achieve that higher multiple over the next 3 to 5 years. What's key to know here is that we were able to create this company with significant headwinds through a pandemic. We were able to raise our initial capital and begin trading in May. Since then, we've put in place a $75 million revolving credit facility. We've increased the analyst coverage on Nomad with 3 currently and many working to initiate coverage over the next few months. And we have initiated our dividend policy being 2 cents per share annually, so a $0.25 every quarter. Important to note that what this represents is currently about a 1.4% dividend yield. It may seem low, but it is approximately double the dividend yield of the other bigger royalty companies out there. And as we said, we want to lead with this dividend. This is a starting point for us. We're hoping to grow this over the years as we grow the business. In addition to that, we have announced 3 transactions since we began trading, with Robertson being the latest one that we announced. So demonstrating that we are executing on the plan of pursuing our growth. In terms of our portfolio, this is really where we differentiate ourselves from the other smaller royalty companies out there. So on the left-hand side, you have our exposure to the different commodities within the portfolio currently. And what's important to know is we're 100% precious metals. There's no exposure to base metals or battery metals or any other types of commodities that sometimes are found in precious metal royalty portfolios. So this is by intention. We plan to continue to be focused on precious metals for the foreseeable future. In terms of asset stage, this is another point that really differentiates our portfolio from our peers. So what you'll notice as of today, just under half of our asset base is assets that are currently cash flowing. And by the end of 2021, we have another 2 assets that will come online, meaning that by then we will be about 85% of our assets that are producing and generating cash flow. And this is very unique. It's a very high level for a company of our size. It's something that is by design. As I mentioned in my introduction, we're very focused on cash flow. We believe that producing assets are what drive the premium multiples in the royalty space. And so we will be focusing on investments that are in mines that are in construction or just are about to begin production, as well as some very smaller investments in exploration assets. But with that mix, we believe that we're going to deliver that base of cash flow along with optionality on resource growth. Just a few words on Robertson. We're very excited about the acquisition of Coral Gold. The opportunity for a royalty company to own a royalty on what we think is a key part of the Cortez camp is not something that comes across every day. We were very pleased to be able to reach an agreement with Coral to bring this asset into the Nomad story. And I think it's important to note that as shareholders of Coral and through your ongoing exposure to Nomad shares, you will continue to have significant exposure to this asset within our portfolio. So on that note, I will end my presentation there. We will be happy to take questions. One thing that I want to point out is we are, as a team, very available for shareholders. This page shows our contact information. Please feel free to reach out directly to myself or to my partners. We always love engaging with shareholders and telling more about the story and the assets within our portfolio. I would also like to highlight that if you go to our webpage, nomadroyalty.com, there is a button right on the front page, which gives you the option to book a meeting directly with management. It gives you access directly into the calendar with different time slots where we make ourselves available to speak with shareholders. So it's quite a simple process, and we look forward to hearing from anyone that wants to learn more about Nomad. So on that note, thank you very much for listening to the presentation, and we'll take questions.